PayPal built its empire by sitting in the middle, between buyers and sellers, between businesses and banks. For years, it didn't need to be a bank, it just needed access to them. That model worked. PayPal handled payments, banks held deposits and issued loans. Everyone stayed in their lane. But that balance is changing, because touching money is not the same as controlling it. And in fintech, control matters. In December 2025, PayPal submitted applications to U.S. regulators to establish an industrial bank with the goal of expanding financial services for small businesses. On the surface, this sounds technical, even boring. But in fintech, structure is strategy.
Hold on, PayPal already handles payments. Why would it want to become a bank at all?
Because handling payments and controlling money are two very different things. Today, PayPal relies on partner banks. Banks hold deposits. Banks issue loans. Banks move money through the system. That dependence creates limits. Limits on speed, limits on pricing, limits on how deeply PayPal can integrate financial products. Every new feature has to move at bank speed, not tech speed. An industrial bank changes that equation. An industrial bank is a state-chartered bank, most commonly approved in Utah. It can offer FDIC-insured deposits and commercial loans, just like a traditional bank. The difference is ownership. Industrial banks can be owned by non-financial companies. That's what makes them powerful. Automakers like GM and Nissan use this model. Fintech companies like Block already operate banks this way. It's legal, it's regulated, and it's strategic.
Wait, so this isn't some loophole? It's fully allowed.
Yes, heavily regulated, closely supervised, just structured differently. Now let's make this practical. Imagine a small online business using PayPal. Sales come in daily. Cash flow updates in real time. But when that business needs a loan for inventory, payroll, or growth, everything slows down. Applications, documents, waiting. Even though PayPal already sees the business's real cash flow, that gap is the opportunity. With a bank charter, PayPal could connect what it already knows to how it lends. Daily revenue, seasonality, customer behavior, cash flow stability. That data is more current than most bank statements, which means faster decisions, more accurate pricing, lower risk, not generosity, math. This move is really about control. By owning a bank, PayPal reduces reliance on third-party partners. It gains more control over deposits, more flexibility in lending, more freedom to design products. In fintech, owning the balance sheet means owning the customer relationship.
But becoming a bank sounds risky. More regulation, more scrutiny.
Exactly. Becoming a bank brings heavy oversight, capital requirements, liquidity rules, ongoing supervision. The FDIC will closely examine risk controls, governance, and consumer protection. Industrial banks also face political pressure. Some regulators worry about tech companies moving too close to banking. Traditional banks argue the rules aren't equal. That's why approvals take time, months, sometimes years. Utah may be open, but nothing is guaranteed. There's another reason this move matters: competition. Payments alone are no longer enough. Stripe is building financial tools. Block already owns a bank. Shopify is embedding finance into commerce. Every platform wants to move closer to the money. If PayPal stayed only a payments processor, it would risk becoming a utility, interchangeable, replaceable. This move isn't aggressive, it's defensive.
So if companies like PayPal already see cash flow and decide who gets credit, what's left for traditional banks?
That's the real question. Technology companies are moving toward banking. Banks are trying to behave more like technology companies. The line between them is blurring. Payments, deposits, and lending are converging into single platforms. PayPal becoming a bank isn't about replacing banks overnight. It's about control. Control over money, control over data, control over the small business relationship. And that shift is already underway. PayPal just made it visible.